It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the smartest guy in the room, Michael Becker.
Hey, Paul.
So today on Ask Mike Mondays, we have a question that we want to ask the guy who's done over 4,000 purchases of apartment units, done over $400 million worth of loans, and has raised over $75 million in equity. So he is the smartest guy in the room and the guy that I know has the most amount of debt in this room.
That's true.
So the question I asked today, Mike, is somebody that was asking concerning about buying an apartment building that lives outside the country. So, Mike, I want to buy an apartment building in the U.S. I live in Australia. I am an Australian citizen. Can I get a loan on an apartment in the United States?
I think the short answer is yes. That happens all the time. People from foreign countries, a lot of people from Canada own in the United States. It certainly makes it a little bit more challenging. So maybe we just kind of talk a little bit about some of the things that a little bit more stringent when you're a foreign national trying to buy in the United States. Freddie Mac and Fannie Mae will both loan to foreign nationals. Certainly, if you go to like a local or regional bank, very kind of hit or miss. I'm sure some of them will do them at lower leverage, but it just makes it a lot more challenging. So most of those banks won't necessarily want to look to loan to foreign nationals unless they have a local U.S. sponsor that can join them on the deal. That's certainly one way of helping kind of bridge that gap and getting it done. The other way would be kind of Freddie Mac, Fannie Mae. So some of the things that when you do a typical Fannie Mae loan or Freddie Mac loan, what they want to have from the guarantor or the key principals on the ownership team, they want to have a net worth equal to or greater than the loan amount and post-closing liquidity of about 10% of the loan amount after you have your down payment. To go ahead and get on a foreign national to get loan, they'll be a little bit more stringent. So they'll probably double that net worth requirement. So if they wanted 100%, you need 200% of the loan amount in net worth. And instead of having 10%, think 15 to 20% post-closing liquidity and a large U.S. international bank account. So you can set up maybe like a trust or some sort of entity in the United States that can hold some of your liquidity. In addition, it'll be just a must that they have a local third-party management company that's got experience in your market to kind of run these deals, as well as you make sure that your entity is set up in the United States and that you have a U.S.-based agent, kind of like your lawyer, for example, to do that.
So it does happen. So a lot of the regional banks and the small community banks will not lend to foreign nationals unless they're a large international or large national bank, possibly will lend to a foreign national. But to get the best rates, it'd probably be the Freddie Mac small balance loan. And again, just like Mike was saying, is that you twice the amount of liquidity, twice the amount of net worth that's required, and they're going to want to have some money in a U.S. account to be brought over just to be held for a rainy day. And that's usually maybe 5% of the loan amount itself. So you want to hold that money in a U.S. bank account.
Yeah, I also think the property itself, they're going to go on the margins on a property as well. So if you're a foreign national and you want to do a big value add, I think that'll probably be a little bit more challenging than a stable deal in a good submarket. So the asset quality, I think, is even more important.
They want to make sure on the Freddie Mac small balance loan that that's a stabilized property. So they want the property that has the greatest amount of certainty.
Durability of income, right?
That's right. They want to make sure the cash flow continues on, that there's not a dip in cash flow because you're trying to improve the property. So usually a lot of the foreign buyers that are coming into the United States, they want to have security of cash flow. I mean, one of the things that we're seeing quite a bit of, a lot of the Japanese nationals coming in to the United States and buying properties and using the SBL program as an opportunity to do it because of the tax laws in Japan, which definitely helps out the Japanese nationals, but unfortunately doesn't help the U.S. investors because they can usually put in 35 or 40% because they don't really care about the return on investment. They're using it as kind of a tax dodge, to be quite honest with you. So that's one of the things that I'm starting to see quite a bit of is a lot of the foreign nationals coming in for tax purposes.
So, yeah, but in short, it's definitely possible to do it. It's a little bit tougher. You need to make sure you have a good group like ours on your side to help you navigate the choppy waters.
So sounds good. Hey, Mike, what else can we talk about?
Yeah, certainly if you find these podcasts helpful and informative, we'd certainly like it if you maybe do one or two things or both. We just created a new Facebook page, the Old Capital Podcast. So if you go to Old Capital Podcast and search that and Facebook, give us a like and follow us there. We certainly post the episodes as we go, as well as certain events that we host. And certainly giving us a rating and review is certainly helpful on iTunes or Stitcher, one of the podcast aggregators. If you go in and give us a 5-star rating, hopefully, and a nice review, that certainly helps us get up the podcast rankings and get and attract better guests.
All right, Mike. We appreciate your time today. Thanks for listening to Ask Mike Mondays. I'm Paul Peebles and Mike Becker. Have a good day.